I'll never forget that day when I asked myself the question, is this it? Is this all there is to strive for in life? That day, I set out on a journey to find more. Now, I am sitting down with the most fulfilled to teach us the tools and tips they use to get there so we can do it faster. Think different, earn different, live fulfilled. This is Contrarian Cashflow. Welcome back, Contrarian Cashflow. I've got Kyle Jones with me this afternoon. Kyle, how are you doing?
Hey, I'm doing great, John. Thanks for having me.
Awesome. Well, so glad for you to be here, and congratulations on your podcast as well. So what's the name and where can the listeners find you?
I appreciate that. Yeah, we just launched today as of this recording. So it's called the Income Investor Podcast, wherever podcasts are listened to, everywhere else. You can find us there. We've got a website, theincomeinvestorpodcast.com as well.
Awesome. And Kyle is beyond a wealth of knowledge. So I recommend any of my listeners to go out and check that out because it's going to be amazing. So, well, Kyle, I've actually invested in a deal with him and one of his partners out in Huntsville, Alabama. So I know him quite well. And along that line, he recently quit his full-time job to expand in entrepreneurship and real estate investing full-time. So pretty excited for him and his upcoming journey. So what are you working on today, Kyle? I know you've got a lot of things in the hopper, but what do you have going?
Today, I'm working on closings, as a matter of fact, as we speak. So pretty heads down. We've got a couple of deals that we're working to pull across the finish line. And so for us, closing is always the busiest time through the process, it seems, and just all the paperwork and the pass back and forth, making sure that all the T's are crossed and I's are dotted. So hopefully we can get that done today, but it's actually looking like it's going to be Tuesday because Monday's a bank holiday. So.
Yeah, well, I know I've been staying close to that one because that was a portfolio of the Huntsville deals. So again, back to the people that think it's so easy, right? To close these deals, you just walk in and just lock it up. That one's been a little bit of a process, but that one's going to be a tremendous project. So I'm super excited for the outcome of that one.
Yeah, no, we're excited.
So the impetus for this whole conversation and podcast is really around that journey. And that's why I really wanted and was excited to have you on the show, was because yours really speaks to me. I've got a soft spot in my heart for any sales professional in any realm, and especially we're both in the tech space. So how did you go from being a successful tech professional and, somebody that was going to be a company man to now quitting your job at, what most would say is a fairly, aggressive age for somebody to retire corporately?
Yeah, I guess I could start on, as I reflect back some events that had happened in my life. And there were a couple that really just exposed the fact that I need to do something else besides working for my W-2. I need to have some sort of side hustle or another stream of income coming in the event that the W-2 isn't always there. And early on in my career, I was working for a smaller startup, and selling software. And in sales, we typically, when you're starting out, it's obviously heavily weighted on the bonuses and everything else. So my actual salary was lower. So brand new job, everything else. And my wife was working at the time as well. She's a teacher, so not a massive salary. And she ended up getting sick. She's better now, but she ended up getting sick to a point where she was not able to finish out the year, which put a lot of financial pressure back on me as a husband and a provider. Thankfully, we only had one kid at the time, because I don't know if I would have been able to provide for all three of my kids and my wife at the time on the salary that we had. So through that process, there was just a ton of financial pressure for me that I was feeling through the process. And I had always been watching Flip This House, HGTV, like everybody else, and wanting to get into real estate. And we had at that time also bought our very first house that we were living in. So long story short, I'm condensing a lot of this, but we ended up selling the house. We made about $10,000 within 12 months on the house, and moved back to Houston to be closer to my parents so they could help with my daughter. And I actually took a different job at the time too, one that thankfully paid more and everything else. So it kind of helped us through that situation. But I bring that story up because it was just a pivotal moment in my life that really allowed me to turn the lights on to real estate in general. And just, like I said, I've got to have some sort of separate stream of income, even though I'm working Now I'm making, I basically doubled my salary, which was great, by going to this new company. So it gave a little bit of relief. My wife was able to focus on getting herself better. And so we were just in a really good position where I could spend more time focusing on studying, education, and everything else. And ultimately, kept progressing towards this world of rental income versus just flipping houses.
I think that's so huge right
yeah.
now too. I mean, I love that story because people love to talk about their successes and the positive. It's always easy to touch on the positives. People want to hear that. And one thing that resonates with me, especially today with COVID going on, is talking about this with a previous guest, is nothing's really COVID proof. There's not going to be anything out there that's not going to be impacted with this type of, a pandemic, right? I mean, you look at all the statistics out there and the analysts were all saying, what was the most likely of, recession, all these scenarios, World War III, all these scenarios.
Yeah.
And pandemic was the lowest of, the opportunity on the list of actually happening. And so I think it's so important that, this time in your life that was such a challenge with your wife getting ill. So that's an emotional struggle and obviously, feeling for her, but then also having the financial burden as well to really push you to get to where you are today. So I just love when I hear stories of adversity and how people overcome it and how that really clicks in their mind, because I think of some of my friends and colleagues now that have spouses and significant others or themselves that have jobs that you would have thought were bulletproof, be it a doctor, a dentist, even some attorneys to some perspective, and their income's getting impacted or they're getting furloughed. And not to mention all the other people that are out there that have been impacted from an employment perspective, retail, hospitality, of course. But I just think it's so important that I just love the thought of, out of the darkness comes the light, and just, totally. That sounds like a really challenging time in your life, but the fact that to take that and kind of use that as a springboard to get to where you are today, I think that's tremendous. So I appreciate you sharing that.
Yeah, absolutely. No, I've learned a lot from that situation, not just in, the way that I'm making income for our family, but just like the mental aspect of it too. Our marriage is better. I just have a lot more appreciation when you go through those types of adversity events in your life. And, I'm kind of sugarcoating it a little bit because, saving the audience from, bringing this down on another level, but it was a very dark time for us as a married couple and as a new family. But
well, and to your point, to build, that's the other side of it too, is obviously, the financial and all that stuff is great and it's important and we all need that to an extent, but the fact that you were able to come out of this with a stronger relationship and, and a better appreciation. I just think in general, we get so caught up in the next thing, whatever it is, the next deal, the next paycheck, the next year, right? A lot of us are like, oh my gosh, we just need 2020 behind us. And we kind of lose sight of what is important to us. And so that's one of the biggest things that's important to me is the time with my family and the level of relationship and our level of communication. So again, back to that, out of this challenge, you were able to actually build a stronger relationship. I think that's outstanding. That's
Absolutely.
Tremendous.
Yeah. Thanks.
So it sounds like you had a challenging time and obviously you guys were able to overcome. Your wife's doing better now, so that's outstanding. So now you're in Houston and that's still home base, right?
Correct. Yeah. I've got the skyline behind me.
It's quite a view, man.
Yeah.
Is that from the bedroom window?
Yeah, I wish. Yeah.
So you got to Houston, you took on this new job. And then obviously you started doing extremely well there. So can you kind of dig into what that progression was like?
Yeah. So there was about 2 years of time period where I was not really doing anything. I still hadn't purchased my first deal or anything. I was just reading a lot, doing a lot of education, self-teaching type stuff. But I was focused on doing well at the new company and, really just trying to perform there and, take advantage of the bonus potential that we had there. So I did kind of get caught up in trying to climb the corporate ladder. And I at the time I really didn't have the mindset shift that I have now where, that's not, in hindsight, that's not what I want for my life. I don't want to be a VP of this global technology company because I don't have my time to myself. And that's exactly what I realized after probably 3 or 4 years of working there and, getting promoted through the process. And I got to a point where the next event that kind of thrusted me into getting in action is, so my dad actually worked for the same company, and he ended up getting kind of forced out in a way. So, into early retirement. And watching him go through that process at the time, he's retired now, and in much better position than he was. He was able to land somewhere, but he went through about 9 months of trying to find a new gig at his, at the age of 60. And so watching him go through that, I think it really resonated with me that, hey, I really need to take action now. Like if I want to be in a position where 60 years old, I don't have to worry about getting another W-2 job just to make ends meet, or just to, prolong my retirement and delay, drawing on my 401k for another few years. I need to start this process now. And more than anything else, I think that's also what really got my wife on board. She's always been supportive of anything I've ever done, but it just really made sense on another level where she was like, it wasn't so much like, okay, I support you. It was like, no, you need to go do this. It was more of a push, like, like you got to figure this out, because I don't want to be in that position either when we're old and doing everything else. So shortly after that, I went and started buying single family homes. And I went into it knowing that I self-funded it, and knowing that I wanted to just learn how to do it. I wanted to learn how to buy an investment property and turn around and sell it for a profit. And so I ended up flipping a couple of houses. A few of them did really well. Some of them did okay. Thankfully, I didn't, ever lose any money. I broke even on a couple of them, but it was a good learning experience. And that's the way I looked at it. I looked at it as, hey, even if I lost a little bit of money, it's the cost of education to learn this, this skill. I can always go out and buy a house and flip it if I ever get in a position where I need some quick income. It was kind of my thinking. But I, at the same time, realized that it took a lot of work to flip a house, and just managing the contractors and managing everything else, especially I was doing it myself. I didn't have a team. Of course I had a GC that was doing it, but somebody's got to manage the GC, and which drew me to more of the rental property kind of research that I was doing. Just really decided to keep a couple of those houses and turn them into rental properties. So there was actually 2 houses specifically. I pulled them off the market and decided to just put them up for rent, and literally had a renter in there in 2-3 weeks on both of them. And still to this day, they were my first renters. I've never had any other renters in those homes. So they were,
that's awesome.
Yeah, they were good buys. We flipped it well. We kept our costs right in line with our budget. So it's a good story, and it's cash flowing, but it's not helping me in terms of really replacing my income, which is what I caught on to. That was kind of my next goal. Let me back up. It was replace my expenses, then replace my income. That's kind of the steps to how I laid it out in my mind. And so
I have a question real quick around the flipping. So, I think that's a challenge in this progression and throughout this journey is, again, you're trading one for another, right? So when you're doing this flipping, and I've been there too, right? I mean, you said you did a pretty good job within budgets. I haven't lost money on a project, thankfully, but I've definitely blown budgets out of the water. Yeah. So they should have been a lot larger wins, just from silly mistakes, paying contractors too early. I'm a sucker for a sob story, hey, I really need this money for XYZ, and I'll come back tomorrow and do it all. And, obviously sometimes they don't always come back. So, and so I think that's one thing I just want to kind of ask you about. So what was the transition from a mindset perspective? Because you said you did really well on a couple of these properties. So that had to be a little bit intoxicating, saying, well, geez, look I just made all this money, but there was also a trade-off of the amount of effort. So what really kind of made you make that shift into saying, hey, this offset of income isn't worth the time, effort, and commitment that I'm making?
It was the time. It really was the time for me. I still really invested in my career and trying to do well at my W-2 job. And at the time, I really hadn't made the shift that, hey, I could really replace my income with this. I just knew that I was still invested because I had a really good thing going on with my W-2. So I was just really, truly looking for something more passive. And I knew about, investing passively, with other operators or anything else, but I have a control issue. And so I knew I wanted to do it by myself, and I knew I could do it because I in a way kind of proved it to myself that it made sense to me. It's, as long as you have your assumptions that are properly aligned with market, and that means like your cost and, what you think you can sell it for. So you're really doing your research on the front end before you move forward, which I've always been more of an analytical guy, even in my sales career. I take the quota and backed into it down to the week and the day for how much pipeline I need to generate in order to get those closed deals to hit my quota. So I kind of use the same logic when going through the process for the rehab, where I needed to purchase the properties and things like that. So I just reverse engineered it back into the price. So it was just really a matter of the time that it was taking me driving out. I was working from home already. So this is, I've been working from home for 10 years. So COVID has nothing on me and getting this, figuring out this work from home thing. I've been wearing hoodies since day one.
What are you guys all worried about?
Yeah, exactly. So it did provide me with flexibility to drive out to those projects, but it was still taking so much time, because that was the other thing. These projects were scattered all over Houston, and Houston is a massive city. It's not condensed like a New York City or DC, something where you can get around pretty easily. But I knew I wanted to eventually, through the process, replace my expenses. That was my goal. Watching my dad go through that process, I got the training that I needed. And so now I felt like, okay, I know how to do that. It's time to move on. It's time to figure out how to actually generate more cash flow without me having to be so involved, which led me to the rental aspect of it. And ultimately, started with single families, and then again, realized that wasn't scalable, which led me to multifamily. And so we purchased our first multifamily deal that was like a 14 unit, and saw the cash flow from that. We then sold that deal, but bought a couple other smaller multifamilies before we finally moved into syndication, which is, raising capital to buy these buildings.
Yeah, absolutely. Well, that's awesome. So that's one question that I have. Obviously, on the circuit, a lot of people are like, well, how should you start? Should you start with the 150 doors, or should you start with the 14 doors? So if you had to look back at your progression, I mean, it sounds tremendous. So, I'm not passing judgment either way, but if you had to look back, do you think the path you chose as far as kind of working your way up, single family, small multi, now into syndication? Or do you look back and say, hey, I really could have jumped in head first and just started with the syndication side of things?
Yeah, I think there's a place for that. People talk about jumping right into apartment buildings, and I don't think there's anything wrong with that as long as you have the right partners and the right team in place. It just really depends. I would caution people who are looking at that to really vet the partnership going in and making sure that the partners have the appropriate experience for what you need in the partner itself, because I personally have been burned in those types of situations. So, I personally wouldn't do it any way different. I think flipping houses got me into a point where I understand construction. I was in the process, and I'm not handy. I don't fix anything around the house. I call it handy.
I'm right there with you. Yeah, I'm terrible. I was like, it was embarrassing. I had to buy tools when I was on the projects. I was buying all the tools that I needed to do some of the handiwork on the projects. I was like having to call my brother-in-law. I was like, hey, can you bring over your drill and this and that?
Exactly. Yeah, exactly. I mean, my dad can fix anything without even YouTubing it, and so he never brought me along. And, frankly, I was more interested in playing sports anyways growing up, but it got me familiar with the process. So even though I'm not necessarily the skilled laborer, I know the order of events that need to take place in learning that construction process. And I've been able to also see things that I probably wouldn't know to look for by just going into a deal where there's a little bit of a value add deal, stabilized deal. And so it got me really comfortable with that process, which, fast forward, now we're doing a ground up construction deal, which I'm really excited about. So, because we did some additions on some of the single family homes. So and that worked out really well for us. I saw how we expanded the square footage of the house and how much value you can bring just by adding, additional square footage and a new wing to the house, essentially. But there's a ground up process. You prep the dirt, you fill the concrete, build the framing and everything else. And so, it's helped me in really looking at also distressed assets and kind of seeing behind the scenes and seeing what it really could be. So it allowed me to really just focus my synergies when I'm going out looking at deals, to really focus on the location and the comps and not so much worry about, the amount of work that needs to be done. It's a numbers game. Again, you back into it, you get an idea on what our construction costs are, you put it into your model. If it works, it works. If it doesn't, then move on to the next one.
Yeah, that's awesome. And I think kind of in the same vein, that's for me kind of going more the, kind of the slow ramp up is just made a little bit more sense. Cause I'm not as particular and specific as you. I'm more of a shoot from the hip sales guy. So I kind of ask questions later, but also I want to have at least the aptitude to understand from a perspective of, hey, a contractor gave a quote for X. Is that reasonable, or is it even in the ballpark? Like, it doesn't need to be within, 5%, but is it within 20 or 30% that I can, say, okay, if I put a little bit of margin on top of that, okay, this should cost $20,000 instead of, oh no, that's going to cost $50,000.
Yeah.
And the other thing is, I think a lot of times with these rehabs, and you've probably seen this too, some of these scenarios sound a lot scarier than they really are. You come across termites, foundation issues. You're just like, oh my God, there's a foundation. No way. I'm not going to buy this house. There's a foundation issue. And then you really dig into it. And so I think those are things that it's hard to learn just from other people's perspectives or kind of partnering on scenarios. I think some of those things, at least for me personally, definitely behooved me by going in and seeing it. And to your point about the partnership too, I was burned as well. I mean, thankfully it didn't come to anything, terrible, but it added a ton of anxiety and a lot of stress that if I was doing it by myself, or if I hadn't given that other person as much control as I should have, it wouldn't have led to that. And so I think that's the important part about when you do start smaller, the losses are only so big. And I think that's the problem as you scale. I think a lot of these people sometimes are minimizing the risk factors, and and being as analytical as you are and taking on capital. I mean, that's why I greatly trust your abilities and your aptitude to do this, because you've been through so many battles and so many deals and projects. And I think a lot of times when you're taking on capital, that's something that I just really want to call out is, do you really have the aptitude to know if a deal is going to go sour or not? And that's what scares me more than anything about people saying, hey, just jump in head first. Again, hey, I'm not saying that's not a goal that people should aspire to, but at the same time, do they really, if they looked inside deep down, do they really have the aptitude to say, call out scenarios like you're talking about from an underwriting perspective or from a construction perspective? Hey, is that a reasonable cost per door based on, what the scope of work that they're trying to do?
Exactly.
If you dug in on some of those scenarios, I would be curious what the answers you would get, right? So, and that's why I always kind of call out the know, like, and trust a little bit, is I think that can be a negative tool as well, because people are so concerned with making sure that the investor ELP likes them versus as much, hey, am I really capable of doing this? Or they're relying so much on their operating partner, but do they have the ability to ask the right questions of the operating partner?
Totally. Experience goes a long way. And you want to make sure that you have really vetted the partner, even if it's just a buddy of yours and you guys are going to go learn this together. That's great, but you need somebody who has experience with the whole process. And I mean that down to a level of, how do you communicate to investors? And that's a big part of what I'm talking about, because when things get really tight, I experienced this too. And thankfully it's more my sales background, and how you deliver bad news to a customer is probably no different than how you deliver bad news to an investor. And rather than like the sky is falling type of communication, which is kind of the experience that I had with another particular partner that I had early on, it was doom and gloom. It was the sky is falling. We've stumbled. We blah blah, using words like this. We've failed. We overlooked. It's like those types of words are going to really set the tone and perspective for the investor that you guys don't know what you're doing, and not to mention that like the sky really is falling, and it's going to say to them that you also don't really know what you're doing, or they're going to second guess that. And for sure, like I'm looking at it like, how do you handle yourself under the pressure? Because how you could have articulated something like that. So here's a perfect example. You get in, this happened. We bought a property. We ended up having to evict. It was 56 units. We evicted down to 50% of the tenants.
Wow.
Which was not expected, right? But we believed in the deal. And while I believed in the deal, I saw the market rents. And sure enough, in hindsight, we got it filled back up and we were achieving our year 3 projections within 12 months after post renovation. But through that process, it was like, the sky is falling type of communication that was coming out. And it created a lot of tension through the process too, because not only do you have your investors that are like looking into this, like, oh, great, we just closed on this 2 months ago and you guys don't, like, now what? Like, am I going to lose all my money? Is like, those are the questions that I was having to answer. And so now I was getting thrusted into my own experience for how to communicate and effectively. And so that's where I just resulted back to my sales background and how I deliver bad news to the customer. It's like, you don't want to lie to anybody, but you also want to set the tone like you know what you're doing. The old saying where you deliver the news, you hit them with it in the face, but then don't just come to them with a problem, come to them with the solution as well. And that's how I was trying to do that and communicate that, and like just highlighting the steps to take that we worked through it. So, and then the other aspect of it too, you have to have the what's the right word? I guess I'll say the stomach for it too, because things do go wrong. We've had probably 4 or 5 deaths across my entire portfolio over the last few years. One of them was a murder. How are you going to respond to that? How are you going to communicate that? Are you okay with that? I'll tell you this too, when people die, it's a huge cleanup. I learned that. Like, I've never experienced anything like that. So your body, especially a body that's been sitting there for 3 or 4 days. And in this particular case that I'm referring to, it happened a couple of times, but one gentleman, he was living by himself. He was just a quiet neighbor and just passed away in his sleep one day. And nobody noticed until they started smelling something coming from the door across the breezeway. And sure enough, we went in. I mean, we spent about $10,000 in cleanup just in a small 1,000 square foot apartment building. $10,000 to clean that up. Yeah, those types of things happen. You're not going to be able to control that, and you've got to be able to handle that, and not lose sight of the end goal. Understanding the process, that you're gaining the experience, and so how you look at that, your perspective is everything as you're going through the process. So you've got to be okay. You've got to have that. That's the kind of stuff that you really don't know how you're going to handle it until it happens to you.
That's huge. I love your point about you've got to have the stomach for it. I think, again, a lot of people gloss over that. And you're talking about emotional situations, but there's also a lot of capital that's at risk too. And so back to your spouse and your wife, you need to make sure that there's an alignment, not within your partnership externally, but also internally. Not everybody is going to have the same level of risk tolerance. And, thankfully, sounds like for yourself as well, my wife is very supportive and, is confident that regardless of the outcome, we'll come out. Maybe we'll lose some money and, maybe it'll be a challenge, but maybe we lose the battle, but we won't lose the war. And I think that's a huge thing that so many people just gloss over. That's just a fact of life. People are going to pass away. And especially, in some of these apartments and areas, if they're just a quiet, individual that tends to themselves, that's tough, right? That's the circle of life. So I'm sure it had to hit you at least, some extent emotionally, maybe you didn't know the person personally, but nobody ever wishes that on somebody, but that's just a fact of the matter. And I think that's a lot of stuff that people don't really pull out as kind of, hey, this is just the reality of the situation. Or like you said, murders. If you're trying to market a property and someone gets, I've heard stories of people that are marketing properties for sale and somebody gets murdered on the property. And, then not just are their buyers going to have issues, but lenders have issues with murders on the property. Yeah. And so then there's a lot of challenges. And if, if you've got a balloon coming up or if there's some challenge or your IO's running out or whatever the case is, that's real. That's serious, right? That's when you've got some really serious, capital at risk. So I really appreciate you bringing that up because I just think that's so important for people to understand. So I guess one thing that I'm super curious about, I've never heard talk about this in detail, is so you've got a multitude of different businesses going on the side, right? So you've got that's what's so important to me is the diversification. It's great that you've got your W-2, you've got some real estate going on, but you've got this tremendous other business that's going on as well. So what made you think hey, the real estate plus the W-2 just isn't enough? Let me try to start to scale outside of this as well.
Yeah, no, appreciate that. So one thing to the process that of investing, and especially in the single family home, is that I realized how long it takes to get an appraisal back. And when you're using hard money and you're trying to buy these deals off wholesalers, typically they want to see you close in 7 to 10 days, and appraisal can really hold that up. Especially in today's market, an appraisal in 7 to 10 days is unheard of. And I actually had a buddy of mine who is now my business partner, but at the time he was just an appraiser, just a certified appraiser working for another company. And I started asking him questions about, hey, how could I give this appraisal to you, and you give me, I'll pay you, and you give me the friend type of treatment to get this done so I can close on this property. So he was kind of explaining the industry, and you can't necessarily just do that. But fast forward, we continued to have conversations around that. And, essentially he is an entrepreneur minded type of person. But if you know anything about appraisers, they're probably, I would equate them to, not that it's a bad thing at all, like a software developer or an engineer. It's just somebody that wants to just
tactical, analytical.
And just go in and do their work, and not necessarily on the sales side. And so that's where, like in the tech space, all the guys who were technical, the developers and the engineers who had a sales type of mentality, they were always the guys that just crushed it. So that's where we kept having those conversations, and we decided to open up an appraisal business. And so we are an appraisal management company. And I was doing this at the same time as IBM. And so that's really when, I skipped a few months in there, but there was a time where I realized, okay, I want to shift my focus from trying to climb the corporate ladder at IBM to just, let me just kind of put my head down, do what I need to do. But I'm also gonna, after hours, start spending this other stuff up. I was really trying to scale at that point my multifamily business, but also start this other business, the appraisal business. And there's a lot of reasons why, and I'll get to those in a minute if you're interested. But it was, it took a few months to really get our licensing in order with the state of Texas, and just get all of our ducks in a row before we launched our business. And I mean, the first thing I did was I called all those lenders back who I was using for my investment properties, and I said, hey, I started an appraisal company. We can do them quickly, so why don't you give us a shot? And that's ultimately how it happened. And one thing led to another, and we ended up grossing about $1.2 million in our first year. So wow. It was just me, him, and we had one other employee. So
wow, that's awesome. Well, two things real quick there. I mean, that's just outstanding. But first of all, I just think it's so impressive when people look at the situation and actually listen, right? So you saw the problem of the challenge with getting appraisals back quickly. And I just think that's where the biggest leaps and gains are found, is when you find a problem, a solution to a problem. So I think that's awesome. Yeah. And then also, I'm always going to lean back on sales, but the fact that you had that background in sales, you're like, hey, how do I use my network? How do I use referrals? How do I scale this quickly and efficiently? And then, you go back to all, like you said, all those lenders that you've been working with, and you build this referral network. And I'm sure then it's just gone gangbusters since then. But that's awesome. I mean, that's a pretty exponential. So was that at the time, you talked about how much you grossed. I mean, was that bringing in enough to kind of give you a chance to step away, or could you cover your expenses with just the appraisal business?
Yeah, for sure. Our margins were very profitable, so that was very exciting for us. But it was a startup, and so I was like, still in the mindset of, hey, we just need to nurture this. So my business partner, he was already a 1099 employee for his other company, so he just said, yeah, I'm all in. And then we hired another person. I was handling the sales, the customer relationship, the operation side of it. And he and one other person, our other employee, would just handle the execution of getting the appraisals back to the lender. And so, he was okay. Excuse me. Take some water. He was okay with that because we were having so much success and we were making this money, but I was still thinking in terms of that is this really real? Is this something that's going to last? So
How
I
could you?
wasn't
I mean,
ready.
that's pretty
Yeah,
amazing. I mean, for 1 year, I mean, that's
exactly.
incredible.
Exactly. And that's where I was like in that position where I didn't really believe it. And so um, it, it took about, it was another 18 months from there when I decided to make the jump from the corporate world. But at that time too, the other thing, I was also continuing to build up my real estate business and continuing to add properties to the portfolio, which, were cash flowing and doing well there too. So um, that's ultimately what led me to feeling comfortable enough to pull the plug on the W-2 and just really focus on both of these areas and get really focused in on the real estate business, but also really focused in on our appraisal business, which is now, we've got license in all of the southern states. So we're working our way to build this national company and, just kind of picking off one state at a time. So.
That's awesome, man. That's so cool. Cause I mean, that wasn't even a journey that you set out on. I mean, so I think
Yeah.
that's what's so impressive about all this stuff is the scenarios you find out about that you never thought were even there. Right. I mean, if somebody asked you years ago, if you were going to start an appraisal company, you'd be like, are you crazy, man? Like, what are you talking about? And now that it's able to be so profitable and efficient, and I'm
Yeah.
sure you've gained a lot of successful business knowledge from running that business separately that you can in turn, plug into the multifamily and the buy and hold side. And then also relationships. I mean, I'm sure you've brokered plenty of relationships from the appraisal business. And that's why I think it's so important when you're looking to scale other sources of income. If you can find some, congruence there between them, it allows for that ability to grow exponentially. So one thing real quick, that's a lot going on at the same
Yeah.
time. I mean, that's crazy. I mean, so you've got your full-time job, you've got an appraisal business, you're doing real estate stuff. How do you you've got a family. I mean, you've got a
Yeah.
family. How do you keep things straight? What are some recommendations for the listeners out there for time management? How did you go about being able to handle all that?
Yeah, that's a really good question. I mean, I started a while before I really started taking on these other companies. I started just trying to get much more done in the mornings that I would want to do after hours or that people may do after hours. So things like just getting my day going and working out, getting all that done so that I could get back and just really hit it running full steam. And there's a health component to that. There's a health component to that as well, because if you don't have the energy and you're not healthy, you're not going to be able to survive that. You're going to crash. And I'm not saying I didn't crash. There were days where I certainly crashed, and weekends where I literally did not move from the couch and try to take advantage of those types of situations too. But the other part of that is, like you said, I've got 3 kids and they are all very active. My daughter's in competitive cheerleading, and both my boys are in t-ball at the time, now baseball. And so being a part of that, and I'm coaching too at the same time. So it's really just a matter of trying to maximize your efficiency. And it blurred together. I don't know if I was the best in really compartmentalizing my schedule throughout the day, but the main thing that I attributed that to is I kind of come back to my health. And that sounds like something that just gets glossed over, but I think there's 2 things that people need to understand especially when you're going into this, is if you're using real estate as a side hustle, you've got to get your health in order because of what I just mentioned. You're not going to be able to sleep. You're not going to be able to sleep efficiently. You're, just going to eat a bunch of garbage and not work out. If you're not going to take care of your body, you're not going to be well prepared to go out and try to make things happen and just really optimize your efficiency. You're going to be crashing. And so, that's probably the biggest component of that. But my day starts at 4 a.m. My day starts at 4 a.m. So like from 4 till 7, I can get a lot done there. I can do my own time. That's where I can really unplug. And that's when the house is still quiet. Everybody's still asleep. And, so usually when I'm coming back from the gym, that's when everybody else is getting up and, getting ready for school and, hang out for a few minutes and on the day. And then I will see them when they come home. And that's really where I really try to shut off by like 5:30 and, try not to touch anything again until around 8:15 or so. They go to bed at 8 o'clock. So once they go to bed, then I'll get back on, or I will hang out with my wife at that time, or, sometimes she just wants to watch her own show or whatever. So if I'm not interested, I'll do my own thing, or, research, network, do whatever I needed to do for these businesses. But yeah, I mean, I think for me, it just comes down to taking care of your body so that you can enjoy the cash flow long term, but also so you can take advantage of the time that you have now, and being younger, if you're younger, or just taking advantage of the hours that you have now to make it happen.
That's great. And I think that's one thing that people do kind of look past sometimes is, sound body, sound mind. And, at the end of the day, your mind is, taking care of that health wise, calorically, physically, cardiovascularly. I mean, that's so important. And so one thing I really like to call out is you talked about compartmentalizing and finding a part of your day that you could control. And I think that's one of the challenges I have personally being a parent as well. My kids go to bed a little bit earlier, but they also wake up a little bit earlier. And that's just for whatever reason, the cycle, they get a little bit moody if we keep them up and they wake up at the same time. And so I think that's one thing that's really allowed me to be successful as well is waking up early. I don't wake up at 4, I wake up at 4:50. So not quite as early. But I think that's tremendous because that does give you a good 2 hours, 3 hours in the morning that you can kind of work through some things, have some quiet thoughts. And then when your family does start waking up, you actually have the ability to interact and be around and be that present, father that, I know that you want to be. So that's awesome. Yeah. I love that advice. So one thing we talked about tangentially, but I want to kind of dig into it more. So who are the people that have supported you? You've talked about your wife. So I kind of want to dig into that a little bit because to me, that's so important. And that's something that I've been extremely fortunate with. But I want the listeners to kind of know what these conversations are like and how that's really allowed you to potentially excel, past what maybe even your wildest thoughts were because of that support.
Yeah, it's tremendous. Tremendous to the point where when I told her that I was going to quit my job, she just looked at me and said, okay. Didn't ask questions, didn't ask how we were going to make any money, didn't ask all that. She just trusted me enough because she had been a part of the process and seen enough and knew that I was working hard and kind of grinded it out to make it happen. And she knew, she's known since she married me how analytical I was. I mean, I look at everything and, even the petty stuff. So she knew that I wasn't going to make a decision that would put our family in jeopardy. And she trusted me with that. So that was just tremendous. But also my 2 business partners, I have one main business partner on the multifamily side. And then of course my business partner in the appraisal business. Without their support and their family support, none of this would have been able to happen either. So it's not so much just my wife in the regards, it's just the team of people that are around me. And that's really how I've been able to do this whole thing and have, basically 3 different businesses at one point. And really, businesses that needed a lot of time and attention to. It was just about building the team around me and leveraging people to put them into the right skills that they need so that we could execute and continue to push things forward and grow the businesses and everything else with that.
That's awesome. Well, I mean, I remember talking to Lane a few times and he was giving you a hard time. He's like, man, I keep telling Kyle, he just needs to quit already. Like, what's he doing hanging around?
Yeah.
So that's awesome.
I have a good team. Right? Yeah.
No, absolutely. Absolutely. Yeah. Well, that's tremendous. And I think back to your point about partners before around vetting them and making sure that they have proper alignments. I mean, you've got to make sure you're surrounding yourself with people that are going to pick you up and push you to become the person that you can be. And so I think that's just so important. And so I would just really make sure when people are looking at these partnerships, really dig deep and make sure that these people have alignments and that they have the same values and morals that you do, because that at the end of the day, that's really what in my mind defines, who people are and what's important to them. And kind of like you said, I mean, this was a journey throughout, but you knew that it was more of a defensive posture to an extent, making sure that you had that ability to provide for your family and your children and everything and your wife. And so I just think that's so great. And again, has helped push you forward. I'm sure. So I guess the last question before we wrap up is around the actual exit itself. So, I know you and I have talked about this before. And again, I appreciate your perspective because it's helped me clear my mind and make sure that I'm making the decisions that align with what I want from life. And so what recommendations do you have? I mean, because it's probably going to be hard for somebody else to duplicate potentially the success that you had from the appraisal business and from the real estate before making that transition. So what advice would you give somebody? Was there a metric as far as, how much your income was versus your expenses? What advice would you give overall to somebody that is looking at that transition, making sure that they're hedging a little bit to an extent that they're not going to just jump headfirst?
Yeah, I mean, that would be the very first thing that I say, and it's the same thing that I told you when we first spoke that last year. It was, don't get so caught up in quitting your job. Set the metrics like you said. And so, the first is, what are your expenses? And if you don't know that, you can create a budget and pull that out. Set your expenses. What do you need to be able to offset, cash flow with replacing, income at some point. And so you've got to understand where your expenses are before you can start looking at, now I'm going to move on to replacing my income. And, for some people that's going to be much lower, especially, somebody who's fresh out of school, maybe they don't really have many expenses. So, take advantage of that right now and live lean and, do whatever you can to educate yourself as quickly as possible and try to find people that you can trust and partner with at some point. So, I would come back to that and just not really getting caught up in the luster of being a full-time investor, entrepreneur, and everything else. It sounds great. And it's, I like it. I like saying that I'm a full-time investor and entrepreneur, but at the same time, it took me several years to get to this point. And, I was the primary breadwinner, making a couple $100K a year. I was doing well. And eventually got to a point where I was comfortable enough because we built up all these different streams of income to be able to do that. And so, it's really just understanding your situation and being aware of where you are at that point and not really comparing yourself to me or anybody else because, appraising, I don't know any other multifamily syndicators who have an appraisal business, but it's not anything special that I've done. It's just a niche that I've found. And you don't have to have some, highly specialized niche. It could be the same, as somebody else if you were like creating a side hustle or something like that. But it's just, can you do it well? Can you do it better? Can you, create income from it and figure that out? So it's really just, like I said, coming back to awareness and assessing your own situation before you can really set the pace and set realistic goals from there.
And I think that's one thing I got caught up in personally was, like you said, the luster of it. It sounds great. Hey, quit my job, kind of just throw caution to the wind. Hey, I got this. Maybe that's the sales part is like, I'll figure it out. I got this. So, that can be a positive and a negative. But I think the biggest thing that you said that is a huge takeaway for me is really make sure that the decisions you're making are based off what's important to you and what you want to have happen, not looking external for the validation of, okay, well, now I can post on social media that I'm a full-time investor, entrepreneur, or anything like that. Right. So I think that's the biggest thing is just make sure you're defining what's important to you, and nobody can do that but yourself. And then make sure that your goals and aspirations align with that. So, and then back to the analytical side, just make sure if you're not tracking your budget, I think that's a huge mistake. I mean, you just got to do that. Maybe not down to the penny, but you need to know, plus or minus 10% of where your spend is going from a monthly perspective so that you can know what you can cut off. Because if you are looking to make that leap, every dollar is going to count eventually. Yeah. So, but all right, well, let's wrap up with the Contrarian 3-pack. So, okay. So I'm curious about this one. So what is the most contrarian investment you have made in your investing career?
Contrarian investment. So I guess
so just, I guess, kind of like against the mainstream. So something, outside of stocks.
Yeah.
I know real estate's kind of, pseudo contrarian, but
yeah, I think
any Bitcoin, any gold.
No, it's, I don't do any of that. I think it's probably a little bit of what we're doing now and experiencing now, and that's development. We're developing a property in the time of a lot of volatility in the market. We've got an election coming up, so who knows what's going to happen after that. And then we've got this coronavirus that we don't know if it'll ever go away, or hopefully after the election, it'll just stop and go away. But, we're moving into ground up construction. And I think that's contrarian to, as you're looking at, all these multifamily gurus, pick your flavor of choice. None of them are talking about development. And in fact, some of them are probably shying away from development. So for us, it comes back to the numbers. The cost of construction and the market that we're developing in is significantly cheaper than where deals are trading on these types of properties. It makes sense. There's a lot of logic there, and it's pretty simple. And again, you back up, make the numbers work, reverse engineer it, back it up. What are your costs, everything else? And so, I'm not just going out and developing a property. I have partnered up with a guy that I've known for a while here locally in Houston. He's been a developer for 35 years. So, he's going to bring that experience and help us through the process and make sure that we're doing the right things. But that's
awesome. Always back to the numbers. Always back to the numbers. And I think that is an interesting point right now, that the cost of these value add deals, price per door, is growing and growing and growing, especially when you look at some of these major metros. And it's just crazy. I mean, stuff's trading at 150, 200K a door in, what I would deem secondary markets. But I mean, obviously they're still major cities in the country, but they're not the coastal, kind of the primary markets that most people talk about. And so I think that's why I think construction is so intriguing right now, in my opinion, as well, is because if you can build for relatively what you're buying, but you have a brand new product versus a 20 or 30-year-old product that you're kind of just refacing, I mean, why not? Why not? So I think that's tremendous. What's your favorite activity? I know you talked about being active, but what's your favorite activity to do with friends and family outside of investing?
I love being at the ball fields. I'm a big baseball guy, played in college, and now I get to coach my kids. So I love being a part of that. And of course, being at the cheer competitions with that too, with my daughter, and just watching them do what they love. They love it and they work hard at it as much as young kids can. And so that's probably my favorite thing to do on the weekends.
That's great. And I think that's such a great learning experience too for kids, is to learn competition, to learn how to deal with people, to learn how to trust others on your team, but also learn that, that sometimes you put your trust in other members of the team and they're going to let you down. And I just think the adversity from youth sports has impacted my life positively, both, when I had successes and failures. And so I think that's such a great learning experience from a young age. And then lastly, so a big part of this also is like, what offers you fulfillment? So in life, outside of the investing and obviously the family stuff, but is there anything else that offers you fulfillment out there that really kind of gets you going and makes you feel, like you're doing the best that you can and being the best you can be?
Yeah, man. I just, I really am so grateful for my family, and in a way that I think about, at some point, being able to, at some point is here, next summer when they get more active into sports and travel ball or travel competitions, being able to just be there with them and support them at every single competition or game. And, just really trying to nurture that and raise them up in a way that is going to create an impact in this world, and not just in their lives. If they want to be multifamily investors at some point, that's great. Or if they want to be business owners, whatever. But it's more about just contributing to society and making sure that they're good people, and that we're not deviating them from that. We're creating and nurturing an environment for them that's going to, build them up and encourage them, and ultimately be able to serve other people.
Absolutely. Absolutely. I'm trying to do the same thing. Hopefully I'm not messing them up too much, but being around, I think, and present is huge. And I think that's a way, kind of back to that time freedom. I think that's a huge way that you can really support your children, and they'll gain a lot of value from that as well. So,
absolutely.
Well, Kyle, thank you so much, man. This has been awesome. I've really enjoyed this conversation. So for our listeners out there, I mean, you've got some deals going on, you've got a podcast launching. What's the best way that everybody can get in touch with you right now?
Yeah, they can reach directly out to me via email. My email is kjones@truepointcap.com, and they can check us out on our website, truepointcap.com. Of course, the podcast website is the Income Investor Podcast.com. So we're out there.
Sounds good. Well, thank you again. Like I said, I really appreciated this conversation and enjoyed a lot of your points. So, all right, till next time, everybody. This has been the Contrarian Cashflow. Live fulfilled. Thank you for listening to Contrarian Cashflow. I would greatly appreciate it if you left an honest review, hit subscribe so you never miss an episode, and share with someone you feel would find value. Until next time, think different, earn different, live fulfilled.